Good afternoon, everybody. Thank you for tuning in for the weekly Spiders preview. Just a caveat is that today is Tuesday. Typically, I do this on the weekends. So it's Tuesday and the market is open, not much going on. So, but all the prices on the charts are going to be from yesterday's closes. So, anyway, last time we spoke, which was about 2 or 3 weeks ago, I talked about how I thought we would just see some consolidation, and essentially that's exactly what's happened. The SPYs have moved an aggregate of 2 points in that time period. So I think going forward this week into next week or so forth, we're going to see some more consolidation, but I'm thinking things are going to start to trend south. Nothing dramatic like a big sell-off, but you'll see as we go through here that some important uptrends have been broken, particularly the tech sector. Energy is testing some resistance. The utility sector, which has really been the superstar of the market over the last 2 weeks, it's up like 10%, is testing recent highs. So I just think the path of least resistance is to start to trend downwards. Sorry. That being said, I'm still neutral because I don't think it's going to be a big enough move downwards that it's going to be worth trading, but we'll see. So let's go through our mantra or our philosophy here, that in financial markets, there are levels that are more important than others, and prices are always doing one of three things: going up, going down, or staying the same. So if you can recognize these trends and levels, and if you can understand them, you can use that to develop a good trading strategy or to enhance your own trading strategy. And even if you're a long-term buy and hold investor or value investor, it could help you pick your entry and exit points. I mean, if you're going to want to hold on to a stock for 2 years, you still would rather buy it at 20 than 22. So this is just an overview, and if you kind of look at just these headlines like Staples broke recent uptrend, industrials breaking the recent uptrend or broke the recent uptrend, consumer discretionary is overbought, healthcare is consolidating, technology is overbought and at the top of a resistance zone. So utilities are testing the highs where they were 2 months ago. So that's why I'm thinking sideways to downwards. So here's the SPYs, and you can see over the last 2 or 3 weeks or whatever here, really just going sideways. But we've broken this uptrend. Remember, trends aren't anything mysterious. It's just, think of it as like a X and O's on a football pattern. This trend just shows that the forces of demand are in control, right? Forces of demand are stronger than the forces of supply. Now that we're up here, they've become equalized. So when a trend line breaks, it just shows you that the supply and demand equilibriums are changing. So now, not to say that demand is going to once again in the near term take over. I don't think so. I think we're going to start to go downwards, like I said. But anyway, that's the thing about trends. People just don't understand trend lines. It's not, I know it's art and not science, but just think of what it's showing. Like in this trend, right? Obviously, the forces of supply are overpowering the forces of demand. Things reverse down here when the trend line breaks. And so anyway, you can see that there's resistance around this level because this is where the highs were back here in December and November. The difference is when they got here back then, this was overbought. And it was overbought. So that's why we saw this like quicker sell-off. Now that we've consolidated, we're not really overbought. So that's why if we do see a sell-off, I think it's not going to be a fast one, at least for the near term. And again, we know our time frame here is always like just a week or two. We have a short term time frame most of the time because we're traders. We're not long term buy and hold people. And this is the longer term chart of the SPYs. This is what we just looked at. This is the sideways trend. You can see 280 was the top here. 280 was the top way back here last year, a year ago, and in May. So that's why this 280 level is an important level. And then you can see how we became overbought, and then we started consolidating. So anyway, the point is we're breaking this trend line. So this is where probably most of the selling pressure will come from, because you can see that the XLKs, and this is, I think, 30 or 35% of the S&P or SPY. So obviously they're always going to look somewhat similar, and this is obviously a big influence, goes without saying. But so this zone here, or 70 to 72, has been resistance. Was resistance back here, and we're also pretty overbought, right? And the last times we were this overbought, right? And you can see this momentum indicator is when it's at this red line or above it, we're overbought. Each time was followed with a sell-off, right? So that's why I'm thinking we're going to see this or sideways, but listen, we've been on a really good run. Markets go down too; they don't just go up. So I'm sure a lot of people are thinking the same thing that I am. Here's financials. You can see they've just kind of been trading sideways above this 26 level. I guess this is probably an important level to watch the next week or two. A break of this 26 level could really add a lot of fuel to the fire of any downtrend or selling that we might have elsewhere. So yeah, I just kind of thought of that myself, even though I went through these charts before. All right, so yeah, that's definitely something I'm going to keep an eye on this week. And if you check out my blog, I'll keep an eye on it. But if we do start to downtrend in the broader markets, let's watch this, because if this level breaks, that could lead to the sell-offs really starting to put on some speed or steam, or whatever you're going to call it. Okay, here's healthcare, right? It broke its uptrend, consolidating. So obviously, like I said about forces of supply and demand, now they're equalized. So it's going to take a little bit of time to see which ones come out ahead. But again, we've had a real big rally, and it's just due for some profit taking. It's just natural, healthy market action. There's nothing, it's not due to trade wars or, this, that, and the other thing. It's just when markets go up, people like to sell to take profits. That sends them down a little bit. All right, so you can see here the discretionary also testing important resistance, this 111 level. This was resistance here and resistance here. And you can see down here on the momentum indicator that we're a little bit overbought. So I think this is going to go sideways. Got to watch to see this trend, if the uptrend breaks, but at the very least, we're going sideways a little bit here. Industrials, here's another one. See, we broke this uptrend that started around Christmas. So you can see, right? Broke its uptrend, and again, nothing magical, nothing scientific. Well, I guess it is scientific. It's like behavioral science, but this is just indicative of right here. The forces of demand are winning, stronger than the forces of supply, and then wham! All of a sudden they get up here, and things just equal out or even out. So if these things head lower, I'd still watch this 71 level. It was important back here. Might have lost some of its importance, but still probably a good thing to watch. But again, here's another neutral to, I don't want to say bearish because I don't want to like act like a big sell if it's coming, but just saying this is not bullish action. This is neutral to short-term bearish. Here's staples again, consolidating, testing this uptrend line, but they've really been consolidating for the last couple weeks. Watch this 53.50 level. That's been the bottom of the range. It was important back here. So again, I guess just like financials, I guess I'm going to be watching at 26 level. I'll be watching this level, 53.50, and I'm not sure where these things closed, but probably somewhere around 54. But again, so this would be another thing to watch. Like if you're trading the SPYs and we start to trend lower later in the week or next week, and you want to know if the sell-off is going to pick up steam or if it's going to kind of peter out, watch that 26 level in the XLFs and watch this 50 level here in the XLPs. If these things hold, and then the downtrend will probably continue to be very moderate. If both these levels break, you're going to see a big sell-off in the SPYs, and then you're going to put on the media, and they're going to be like, oh, trade war this, trade war that, blah, 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 China. But they really don't know what the hell they're talking about. I mean, just remember, most time markets are moving due to noise, and when I say noise, I mean flows of funds, money coming in, money going out. There's not a lot of traders, believe me, at least not everywhere I've been, sitting around saying like, oh, trade war, the trade war is over, blah, blah, sell, or buy, 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 buy. It just doesn't work like that. It's just people put money in their accounts. Traders got to go out and buy the stocks to put it in their accounts. Like, for instance, say someone wants to withdraw $100,000 out of a mutual fund, right? For whatever reason, they need to raise $100,000. So they call up their mutual fund broker and they say, sell $100,000, or I want to withdraw $100,000. So the traders of that mutual fund have to sell $100,000 worth of the basket of stocks that's in the portfolio. Now, say the exact same time, another client calls in and says, I want to invest $200,000. Now the traders have to go out and buy that basket of stocks, and they can't, match them up because they got to go through an exchange. So now you literally have traders that are buying the same stocks that they are selling, and they need to buy 2 times as many shares for the buys than for the sells, right? So that's market noise. That's not due to trade wars or the Turkish lira. All right, sorry for my rant. Anyway, here's a longer-term chart of the XLPs. I always like to point out the importance of this 50 level. And you can see in December, this is last May and December, that's right where we turned. This is a very important level. I mean, I don't think we're going to go down to that level, but in the near future, but just keep an eye on this. And I like to show this to people that question like the importance of levels and trends. All right, this is energy, which I mentioned before, testing the 60, 650 level with support back here. So a little bit overbought, so I don't think it's going to break through it in the next couple of days, maybe next week or the week after, if it does. This is the longer-term energy chart going back to 2015. Look how important the 78 level is. So eventually, if our civilization doesn't collapse due to a meteorite or whatever, famine, socialism, when this thing does get back up here, I'd be looking for resistance there. This is that 60, 650 level we talked about, right? You can see it was support back here. Materials is kind of from a weighting perspective, unimportant for the SPYs, pretty much usually, because it's only like 5% or 4% or whatever. But anyway, it's just another sector that, you know, if you don't fall asleep looking at it because it's so darn boring, you can see it was trending up, broke this uptrend, now it's trending down. But I mean, we're talking about a range here of like 1 point. I personally don't trade these things. I don't know if you do, but it's part of the S&P makeup, so I think it's important to look at. And then, ironically enough, utilities has an even lower weighting, but utilities are very important because a lot of people like to invest in utilities, especially people that are looking for income. So anyway, so this is what I had mentioned before, right? These things have been in quite a rally since the beginning of the year, up like 10% as people are searching for yield and as interest rates are going down. But from a supply and demand equilibrium perspective, you can see, right, the highs back in November and December right around 57, and that's right around where we are here too. So again, just another reason why I think the market will trade sideways or maybe trend a little bit lower. So it just, that seems like the path of least resistance. All right, well, thank you for listening to my rant. Hopefully it'll help you make some money and understand what's going on in the markets a little bit better. And remember, the whole point of this, why we do this here, is because I want you to understand how these supply and demand dynamics are moving the markets, and it's not due 95% of the time to what the people on CNBC or Fox Business News or whatever are talking about, right? So if you understand these dynamics, like for instance, you might be whatever listening to the radio in a week or two, and the market might be down, 30, 40 basis points. And then all of a sudden in the afternoon, it's like, oh, market's down 2%, because of trade war, or China this or China that or Korea this. But you'll say to yourself, well, gee, maybe I should look at market charts. Maybe that 26 level broke in financials, and that's what, had the snowball going, or had wood to the fire, or whatever, whatever that expression is. So anyway, hope you learned something, and I will speak with you in a week or two. Thank you.